Hello everybody, this is Derek Smith from SmithREFundingSource.com, and I wanted to talk to you all about how to fund your real estate deals using private money, because there seems to be a lot of confusion about private money, what it is, when you should use it, how you should use it. So I want to clear up some of that confusion by doing this little video. So let's begin with looking at what private money is. So private money is exactly what it sounds like. It's money held by private individuals. In other words, usually it's in their savings. So there's money that they hold in bank accounts, they hold in CDs, IRAs, wherever it may be, by average everyday people. And these people become the bank, so to speak, by loaning their money to real estate investors like you and me. So who has the private money? If you take away anything from this video I'm giving you right now, take away this. Never judge a book by its cover. You likely underestimate who has money. Lots of people have money and they just don't advertise it. There are all types of people out there with money for deals. Now, why would people lend you their private money? Well, in short, they lend because they want to make money doing so. You know, we real estate investors can provide better returns on their money than they can get almost anywhere else. So, you know, look at CDs, for instance. A safe investment like a CD currently owns around 2.7% interest. We can do much better than that when they loan us the private money. So let's talk about how your private money can be used. Private money can be used in almost any creative way that you can come up with and that you can get a lender to agree to, and that's the important part. You can use private money on both buy and hold and fix and flip real estate deals. It can be used for short term. Some people will do long term. And it can be in lump sums. It can be in installments. It can be with or without interest payments, as a matter of fact. It can also be with shares of the profit. The possibilities of using private money is only limited by you, by the lender, and by the creativity that both you and the lender bring to the table. So let's talk about the structure of private money deals. So buy and hold real estate investments are structured in much the same way as conventional bank loans. The lender puts up the full amount to buy and rehab the property, and the buyer, you repay the loan at an agreed upon interest rate and an amortization schedule. These loans are usually for 5 years or less with balloon payments at the end. A lot of times the lender agrees to refinance a loan at the end of the term because they like the stability of the income. On certain buy and hold deals, you can actually use private lenders as a second mortgage behind a primary bank lender to cover down payment or rehab costs. There are two things you have to remember when you're doing something like this. Number one, be sure your lender understands their position as the second mortgage holder. And number two, also be sure your primary bank lender is going to allow it. Some would not, as they want some of your own skin in the game. But by the way, if you're able to do this, you can do 100% no money down deals using private money. Some people who do fix and flip deals with private lenders have actually used profit sharing agreements. And in these type of deals, the lender loans the entire amount to purchase and rehab the property. Then once the property is sold, the profits are split as per the agreement that you have with them. Now, there are no monthly payments and the lender has no say in terms of how the property is going to be rehabbed by you and how it's going to be listed. But of course, you need to keep them informed throughout the process. In both these cases, there are significant amounts of paperwork drawn up to protect you, the lender, and their money, of course. And then a proper closing is held with an attorney and all monies are properly escrowed or exchanged. A deed of trust is always recorded and a promissory note outlining terms and conditions is always executed as well. Oftentimes, they're also going to ask for a personal guarantee. But you should have no intention of defaulting, and this personal guarantee seems to make the lenders more comfortable. Let me give you a little advice for finding and using private money. First, you should think about and develop a private money program that's going to work for your business, one that you can put on the table in front of a potential investor. You know, you want to suggest loan amounts, you want to suggest interest rates, you want to even talk about profit sharing splits up front if you plan to do so. Also explain in detail to potential lenders how your program is going to work and how it's going to benefit them. Don't assume that people with money is going to necessarily understand how money and investing works, nor should you expect them to formulate a deal for you. You're the expert, you're the investor. A lot of people possess limited know-how and out of fear of looking ignorant, they will say no. Avoid scaring away potential lenders by making things clear and easy for them to understand when it comes to your real estate deals. Now, second, have a short, succinct speech prepared that explains what you do and how you help people earn higher investment returns. And those people, of course, is going to be them. As I said, you never know who has money. Plus, you never know who you're going to run into or who might be looking for better investment returns. You might encounter them anywhere, anytime. So you want to be ready with your, let's call it your elevator pitch. Finally, remember that you, the investor, do bring a lot to the table. And lenders like myself do need you just as much as you need them. Now, there is the golden rule. He who has the gold makes the rules. But we do need you all to take these loans out and, get the investments and get a return for the private money lenders. Create a structure that works for both of you. And by the way, if our offer for private money does not work for you, walk away. Okay? There are plenty of other lenders out there that you can work with. Now, let me give you 6 reasons why you as a savvy real estate investor should use hard money financing. Now, I'm sure if you're new to real estate investment or just really don't understand the process, you might have some questions. I often hear investors talk about things like, why would someone pay hard money rates and fees? Or how can you be profitable with the high cost of capital? Or hard money is for broke people with bad credit. But the more I learned about financing, it was clear to me that each type of financing is a tool, just like the tools you have in your garage. And it's important to have as many tools as possible at your disposal. Now, the beginning of every deal starts with financing. You cannot get a deal if you cannot finance a deal. It talks about how much down payment amount it's going to be, what the terms are, what the loan to value is going to be, how long it's going to take to close, and things like that. So let me give you some reasons why, again, you should consider using hard money on all your deals. First, I have the cash to closing down payment. Now, one of the biggest advantages of hard money versus other types of financing is the high loan to value. Real estate investing can be, of course, a capital intensive business. Most banks are requiring between 25 to 40% equity into a deal compared to hard money financing that may cover even 100% of your costs on a strong deal. Structuring your financing to limit your cash into each deal will give you the opportunity to do multiple deals at once. So let's talk about those multiple deals. If you're able to close with zero money down, which you can with private money, how many deals could you do? Well, the answer is that you can do all of them, as many as you can find, right? With less money into each deal, it gives you, the investor, the ability to have multiple projects going on at the same time. There's nothing more frustrating than watching great deals pass you by because you're waiting for your deal to close with your FHA buyer that has to extend the closing time 2 times or whatever it may be. I see a lot of borrowers keeping a large amount of cash in the bank, hundreds of thousands in some cases, so that they can do more deals with hard money rather than less deals with large down payments. Another thing you have is fast closings. So in a competitive market, a great way to set yourself apart from the other offers on a property is the ability to close quickly. So a seasoned investor can decide if they are moving forward on a property in less than 30 minutes. But getting to the closing table is what the seller is looking forward to do. A typical lender is taking about 6 weeks to close a deal right now, which leaves a lot of time for the deal to blow up. Hard money or private money lenders can close as quickly as 2 weeks, and it is not uncommon to close in a week. Put yourself in the seller's shoes. Which offer are you more likely to take? Private money is less expensive than a partner. Look, I've done a few deals with a partner. I was finding and managing the deals, and my partner put up the money. We split the profit 50-50. This was a great situation when I was getting started because I didn't have the capital to fund the deals I was finding. After we did a few deals, I was able to build up reserves. I found that even after paying the fees and interest charged by a hard money lender, that I made more on the deal than splitting profits with a partner. Next, it's easy to qualify for a hard money or private money deal. Bank financing has become much more conservative following the last downturn around 2008, especially for real estate investors. Banks want to see very strong borrowers, money in the bank, consistent, easy to verify income, great credit, low debt to income ratios, and experience. Sometimes real estate investors have trouble showing consistent income as the deals ebb and flow, or maybe their money is tied up in a deal they're working on. Hard money lenders are usually more understanding of self-employed borrowers and not as concerned about the income and the credit as long as the deal makes sense and the borrower can support it. Next is consistent. Oftentimes, banks and private money lenders change their loan. It is difficult to do business with a lender whose requirements change if they don't like the property. Remember, hard money is a tool just like any other type of financing, and there will be deals that it makes perfect sense for and others that might require a different tool. So when analyzing your business plan or your next deal, take time to see how things will look using different financing methods. Let's talk about what types of deals are best for hard money loans. Not all real estate deals need a hard money loan, but there are real estate deals where a hard money loan might be best. So what are the best deals for hard money loans? Real estate investors use hard money loans for several different situations to fund. The main reason a real estate investor will choose a hard money loan over traditional financing is a hard money lender has the ability to fund the loan quickly. As I said, in many situations, a hard money loan can actually be funded in as little as a week. A hard money loan may be your best source of financing when banks are not an option or the loan is needed in a short period of time. The most common types of real estate investing deals that may require hard money loans include fix and flips, land loans, construction loans, when the investor has credit issues, and when a real estate investor needs a loan very quickly. The loan amount the hard money lender is able to lend is determined by the ratio of the loan amount divided by the value of the property. This is known, of course, as the loan to value, and you know it as LTV. So some hard money loans will be based on the after repair value, or the ARV, which you're aware of as well, which is the estimated value of the property after the borrower has improved the property. A hard money lender will also consider the borrower's plan for the property. The borrower, or you, must present a reasonable plan that shows how you intend to ultimately pay off the loan. Usually this is improving the property and selling it, or obtaining long-term financing later on if you want to buy and hold. Finally, let me give you 3 scenarios as to when you might want to use private money. Scenario number 1, you need cash, right? The attraction of private money lenders is the ability to obtain cold, hard cash. So having access to private money enables you to make offers you normally wouldn't be able to make. Now, this upside is significant, as nothing has the power to entice a seller more than a cash offer. This approach is ideal for people like you looking to acquire bargain deals or distressed properties. Sometimes the best way to win a bidding war and avoid paying a higher price is to increase your down payment. Look, sellers favor strong buyers, so if you can afford to make an all-cash offer, then do so. That's almost always definitely a way to slam dunk a sale. It's no secret the advantage of an all-cash offer lies in its ability to sway the seller into taking your deal. Now, cash offers have a greater chance of being accepted, as the majority of distressed sellers do not want to deal with the burden of a bank. Along with extended closing times, the uncertainty of a conventional mortgage is another reason why sellers prefer cash offers over other financing options. The power of cash offers can also help to fuel more deals for you as an investor. The second reason is that you need financing immediately. So securing financing in a timely fashion has proven to be the bane of existence for many new investors. So finding a real estate deal is great, but if you don't have the money to fund the deal, it's a waste of time. In most cases, investors seeking to acquire a lucrative deal in real estate will need working capital immediately in order to close the deal. So if you're looking to capitalize on speed and efficiency when making a deal, you should seek private money lenders. Rather than waiting an extended period of time with a bank, you can move quickly and more swiftly to secure time-sensitive deals, helping to capitalize on opportunities that otherwise wouldn't be available. Although a private money lender will demand a cost of somewhere between 6 and 12% interest on money borrowed, which is more than a traditional bank or institution, the benefit to you is in the form of volume and efficiency, as you have the opportunity to close on more deals in a shorter period of time. As an investor, this is an invaluable asset. The third scenario is when your credit isn't up to par. Private money lender can be beneficial in many ways, but none more than those with below average credit scores. The appeal of private money lending is the ability to borrow money without being subject to traditional credit guidelines and requirements. Banks and credit unions are generally less willing to work with investors that have less than perfect credit or can't provide proof of steady income. However, with a private money lender, you can sit down and discuss your options, including negotiating the amount and terms that make sense to you. You as an investor have more options with private money lender, as lenders will make loans that the average bank would typically pass on. However, it will also come at a cost, of course. The use of a private money lender is going to entail a higher rate than other loans. In some cases, private money lenders can even delineate points, 3 to 5, to represent further percentage fees based on the loan amount, similar to hard money lenders. That said, it's important for you to note that every lender have their own set of costs. So I advise you to conduct your own due diligence. The ace up your sleeve, though, if you want to be a successful investor, is your aptitude for securing capital. Without capital, folks, there's no deals. So the best investors not only have the resources, but they have the access to obtaining working capital whenever it's needed. If you're looking to make your mark in the real estate market, you need to seriously consider the use of private money lenders, as it can take your real estate business to the next level. That said, though, it's also important for you to take the necessary time to find compatible lenders that not only identify with your needs, but also your financial demands as well. Not every private money lender is the same, and every lender will have their own set of rules when it comes to lending money. But done right, the use of private money lenders can help you obtain more deals and ultimately boost the success of your business. Look, it doesn't matter how much the money costs. If you're able to do a deal and make money off that deal in the long run, who cares what interest rate you pay? Take that money, get the deal, move on to the next property. All right, so if you have any questions for me, you can always reach out. Also, if you're looking for private money, I'm a private money broker and a private money lender myself, and I have access to millions of dollars. So you can go to www.smithrefundingssource.com. and I'll give you more information, and I'll give you my time as well. All right, thank you for your time. I'll see you in another video.